All right, hello everyone, and welcome to today's webinar, Bank Connectivity, the data behind where we are and where we're going. We do ask that anyone who is dialed in to please make sure their microphone is muted in order to eliminate any background noise during the presentation. Today's webinar will consist of a 55-minute presentation followed by a 5-minute question and answer session. Please feel free to post any questions you may have throughout the webinar, and we will either answer them when you ask or in the Q&A session. If we do not get to your question, someone from our team will follow up with you to answer the question. Today's webinar is eligible for CTP and FP&A recertification credits. The credit forms, a copy of the deck, and the recording will be sent via email in the next 7 business days. Today, we are joined by Craig Jeffrey, Managing Partner and Founder of Strategic Treasure, and Isaac Zabi, Publications Manager of Strategic Treasure. Craig and Isaac, I'm so excited to welcome you to today's webinar, and I will now turn the presentation over to you.
Thank you, Laura Beth. Good day, everyone. Welcome. Thanks for spending some of your afternoon or late morning with us on this topic. I'm appreciative of you focusing on this area of importance in terms of bank connectivity, and Isaac and I are eager to hear your results of some of the polling questions we have, see what you guys respond with. There's several ways of staying engaged. One is through the chat box. We can put any questions you have there. We'll answer those either in context or at the end. You can also, and we would greatly appreciate it if you answer the polling questions. We have 4 today to help move the process along and see what others are thinking and what others are doing. But let me go through our agenda today. And we have the topics laid out in front of you. We will talk about the connectivity context. What do we find ourselves in as Treasury professionals or people in finance, how we have to connect for payments, for information reporting, and where do we see complexity arising? There is much more complexity, many more options than were available in the past. And some of these are great, and some of these represent a challenge, especially if we're working with old systems, we're acquiring firms and managing through that. The next area we'll cover is where are we? What are the different options from formats to how we actually make connections? And if you're not wanting to get too technical, that's okay. We will just cover things from a perspective that makes sense, whether you're a treasurer or you're a treasury analyst, to understand why these things matter in the context. So where are we? We'll also look at where we're going, what's happening with some new technologies for formats, for connecting, for information reporting, et cetera. And we'll look at a number of results from some surveys that we've done. Finally, we'll wrap it up with a summary. What does this mean? Where we go from here? So again, thank you for joining us, and we'll get started with the content. Let's begin with the areas of complexity. And you can see in the matrix or the box that's on the bottom side some of the different categories of where complexity arises. So if you're a small company, let's say $10 million, and you deal with one bank in one currency, all your customers are there, your suppliers are all there, life can be pretty easy for connectivity. You dial in on a portal. But as companies get larger and more complex, that can create significant channels, more options, which means more decision points. So, as you go across the country or as you go across the globe, you might connect with many, many more financial institutions, more banks. Then when you're making payments or gathering information, there's other formats that you'll need to have supported. Old standard, the MT message formats, BAI2, those formats that are all determined by the position of commas in terms of the value of a particular item, to some of the more modern formatting or format principles like ISO 20022, which many people implement in terms of XML, et cetera. Then we look at how many systems you have. You acquire other firms, they'll have multiple accounting or ERP systems. You might have multiple treasury management systems even. There might be portals that you connect to, different ways of getting data into an underlying system for reconciliation, for trading, for getting market data or rates. All of these require some connectivity that may resolve itself in connecting with the bank side. Then we look at the connectivity channel or the method of connecting. I mean, you pick up a phone, you want to talk to someone, you don't necessarily care how all that magic works behind the scene where it goes and connects to someone on a cell phone or a landline in another country. You don't necessarily know how all that happens. Well, we tend to have to get our hands a little dirtier in terms of the connectivity, whether we're connecting with a host-to-host connection, like a secure file transfer protocol connection listed as direct connection, or whether we're using a network like SWIFT or EBIX, where people are members there and the method of connecting once you're established is easier. There's a membership model. There's a method of communicating. And on and on. There's a number of complexity elements with the channel that you use or the method of connecting. Finally, the global nature of the business. We're in more countries. We're dealing with more currencies that we're paying in, receiving in. We're more and more of our companies increase the percentage of their business that's international or outside their home or primary country. And if it was just the payments and payment types, that would be enough. But in addition to that, there's also compliance requirements. So not only formats, but what's necessary for complying with payments in particular regions or in particular certain individual countries. And finally, payment types. Just like you go through the grocery store and you can pay with cash, check. Please don't be in front of me when you pay with check, or card. So too, there are many options for payments. Bulk file payments like direct deposit of payroll, is using the ACH or the Notch network. Different methods of sending payments for high value, et cetera. So when you think about all these payment types, all the systems that these payment types originate from, the formats, how you get them to the banks, the specific issues of the banks, the complexity level goes up dramatically. This is one of the most significant challenges as organizations expand, and even as technology improves, more choices across these dimensions means the complexity goes from complex to very complex to hyper-complexity. And this is one of the challenges of bank connectivity. So with that, we will start our first polling question. We're going to talk about complexity here and see who on the line has a perspective about where your challenges are from. So this is a question that you select one, which is your most prevalent answer. What's the challenge with the majority of your bank connectivity challenges? Where are they coming from? Complex formatting, diverse connectivity channels. Do I connect host to host? Do I drop something in a portal and hope the file's picked up? Is our high volume of payments the most complex aspect of it? We're in so many currencies and countries. That's creating a challenge. Or we just have so much different technology, whether it's because we acquired or we just keep adding and don't actually retire anything. What's the challenge there? So this is our first polling question. We'd love it if everyone answers. We'll show it once we get over about 150 or so. I guess we're over 100, so you can keep answering it. Let's go ahead and show that. I'll make a few comments, and then I will turn the next slide over to Isaac. So looking at this, we have the number one, 30% are saying complex formatting requirements are the issue. The new ISO 20022 standards, changes in BAI, new elements there seem to be number one, closely followed by the diverse connectivity channels. What are my options? Do I go through SWIFT, B2B? Do I use a Treasury aggregator? And the next one that seems to be is the history of bringing up different systems or acquiring different technology systems for payables, treasury, reconciliation, et cetera. That's about a fifth of the respondents identified that as the number three, or their number one option or third on our list. So this is very helpful. And actually that has now taken number two position. So excellent. Thank you for responding. We'll move that off to the side. Thank you for responding on what's complex on your side. We greatly appreciate the quick response on those items. So now I want to welcome Isaac, who is our publications manager, to the webinar. Isaac.
Thanks, Greg, and hello, everyone. Thanks for joining us today. So continuing on the topic of complexity, this slide here is intended to show the geographic and globalization challenges that exist in today's business environment. So really quick, all of this data was just recently obtained as part of a 2018 B2B Payments and WCM Working Capital Management Strategy Survey, so all the figures are very recent. And first, looking at the pie graphs on top, you can see that 31% of companies are operating in just one country, which makes for 69% operating in multiple countries. And now looking at just the three pie charts on the right, you see nearly half of companies, 48%, were operating in 6+ countries, which is around where the broader challenges that stem from globalization begin to pick up. So once an organization expands not just beyond their headquarter country, but completely beyond their headquarter region, so for instance, expanding from the U.S. into Europe versus the U.S. into Canada, complexities related to new bank relationships, currencies, regulations, etc., have a much greater impact. So turning now to the regional operations in the infographic on the bottom half here, we see that indeed many companies are operating in multiple world regions and outside of their headquarter country. So these currency and these regulatory issues would definitely have an effect there. And it is also worth noting that, and I think I pointed it out here, that the majority of respondents from this survey were headquartered in North America, which is why there's a much larger concentration of companies operating there. But looking beyond North America, roughly one-third, a little bit over one-third of companies are operating in each world region, which means that payments activity really is occurring globally. And as we will see in just a moment, this has resulted in an array of bank relationships and currencies coming into play for most firms. Craig, any other thoughts there?
I think this echoes and amplifies what we talked about in terms of the global cover nature of business. Just looking, even though our audience is dominant in North America, 8 out of 9 firms have operations there. You can still see coverage even in Africa and the Middle East, 22 and 30%. It's so global, and it's it continues to go that way, and it's something Treasury has to deal with appropriately. It's the new era of complexity.
Awesome, thanks. So now moving ahead, so here we're going to quickly look at 3 specific elements of payments complexity that Craig had mentioned previously, but that impact firms, beginning with high payment volumes and then the use of the numerous currencies and banks as well. So as just mentioned, the globalization has resulted in the need to maintain multiple bank relationships and to generate payments in multiple currencies. And we do see the extent of those efforts in the top graph, where 82% of companies use more than one bank and 73% use more than one currency. And of course, the more banks you connect to, the more complicated your processes and workflows become, especially if each bank is in a different region or operates using a unique set of formats. And the same goes for the use of currencies. But what really makes this activity difficult to manage is the sheer number of payments that Treasury must account for. So if it was just a few dozen payments a week that Treasury was managing, then it would be relatively easy to track the status of each payment and verify its settlement, even if transactions were occurring in different currencies and through different banks. But as we see, it's not just dozens of payments from most companies instead, and now looking at the bottom graph, for nearly one-third of firms, over 100,000 payments are generated globally every month. And that is just considering ACH, check, and wire payments. And you add in card payments, and the volume grows even higher there. So if you look at the level of complexity, this just goes to show that before the technological components, such as message formats and connectivity channels, are even discussed, and we will discuss those components in just a moment, many of the payments challenges confronting firms are caused by the breadth or the scope of their payment operations, as opposed to the sophistication or lack thereof of the underlying technology stack. Greg, before we move on, anything else you want to touch on there?
I think just from taking a step back on this, in addition to the great points you made, the idea that Treasury is Treasury, well, yeah, they do payments, they handle different areas, but you can see the massive differences in volumes, and that's just one area of Treasury. So when you think about what's our payment strategy or how do we handle connectivity and what we do, and you're putting together your technology architecture, a modern Treasury technology stack, your needs can be quite varied from another organization, and that requires a different set of solutions. And I love looking at these order of magnitude differences on the bottom in terms of 1,000 up to 100,000, 2 orders of magnitude more or over 100,000. It's just a wide range of volume and activity that organizations go through. Excellent. Thank you. Thank you, Isaac. And now, where are we currently? What is the scenario? So you will need to pay attention to this complex chart. There's a lot in it, so let me unpack it for you. The concept of a Treasury aggregator in the middle here is a function, a service that will handle both information aggregation and payment hub capabilities. And what I mean by that, when you think about the banks on the right side, you may have a lot of banks across the globe. How do you get that information back into your Treasury system or your Treasury reporting tool to say what is my balance, what banks, what accounts? Where do I get information back to my ERP system? I might need it for posting paid checks or just data, or for accounting. Maybe information is coming back to accounts payable. Maybe it's coming back to a reconciliation platform. So one side is the data has to come back from the right to the left in a format that makes sense to the originating system. And oftentimes you're pulling it back, and you don't necessarily want to pay the bank 2, 3, or 4 times for the same pieces of data. So when you look at the right side, I've got to pull it back. I use a Treasury aggregator. It could be a dedicated vendor that does this, or it could be one of the several Treasury management system vendors who have built extensive connectivity capabilities to be able to handle this and manage this. So it takes old style formats like BAI2 or MT940 and can parse that and put that back into the underlying system, and in the meantime add value to that by checking to make sure all the statement information is there, that yesterday's ending day balance matches today's beginning day balance or the 2 days prior to yesterday, to make sure you're not missing transactions. It should also be able to handle newer formats, some of the XML formats or other message types coming in from the right to the left. So this is, instead of I have 50 separate individual connections to my 50 banks that I'm dealing with globally, to I use an aggregator who will connect to some banks directly, others through networks like SWIFT or EBIX, and they'll handle that. So just like I don't have 50 phones on my desk to take calls from 50 people, I have one phone and they call me at my number and I talk to them. Same thing on the inbound information side. On the other side, when we move from left to right, or rather the other direction, we're sending payments out. Treasury has Treasury payments, oftentimes wires, sometimes ACH. Sometimes Treasury is responsible for AP payments. But most organizations have other areas, payroll, accounts payable. If it's an insurance company, they may have certain claim systems or annuity payment systems. But there are oftentimes a number of areas that generate payments from the organization that have to make their way through to the bank. And when you do that, usually if it's electronic, for example, you have to get that information and deliver it to the bank. Either you drop it in the bank's portal, you stick it and do a host-to-host connection that you support and maintain, you pass the keys back and forth, maybe you deliver it through the SWIFT network. Well, the concept of a Treasury aggregator is now all of those payment types, different formats can be sent to the aggregator, who does things like validating data, the format's correct, making sure that sanction screening might be done so that you identify a potential issue before it enters the banking system, and they might reformat it or put it in whatever format's necessary to the particular end banking partner or end state when you're delivering that. So this payment hub capability is a subset of the functionality of a Treasury aggregator as we define it. So it helps you on the outbound side for payments from any source. You can also do checking and confirming that your payments are fine from a Treasury perspective. It can handle more than just Treasury payments, which are oftentimes wires, sometimes ACH, to AP, which might be the lower value payments that come across in ACH or ACH-like formats or SEPA, et cetera. So this sits in the middle, and handles the complexity. So if a format changes or if you change a bank at the other end, you don't have to retool completely what's done in AP, Human Resources, or Treasury. The Treasury aggregator can handle some of that complexity, and it acts as the phone system and handles all the complexity of getting those connections working behind the scenes in an optimal manner. So that is, as quick as I could explain it at that level of detail, bank connectivity, where we sit currently. Isaac, before we move on, you may want to jump in on anything here before you take over for the next couple of slides.
All right, thanks, Craig. And I will move forward to slide 8 really quick, but just say, as we do so. So Craig did just walk you through what a modern-day leading practice connectivity architecture looks like. But however, this is, of course, an optimal view of how such processes should work, and is not the current state for every company today, as you all might well know. Even for those firms that have adopted a modern and updated technology stack, these processes do not always function as you'd like them to. So when you get to the topic of system integration and you begin to analyze corporate perspectives on the subject, you do realize that there's still a lot of confusion and frustration stemming from this area. So now looking at the data here, we asked corporates to indicate their level of satisfaction with the integration that they maintain between their financial system and their bank. And while just over half, 51% there, were satisfied, 1/3 were neutral, and 18% were dissatisfied. So looking at these figures, although the 18% dissatisfied might not seem like that large of a number, it does represent nearly 1 in 5 firms, and then there were another 1/3 that are not necessarily unhappy with their options, but we can assume that they experience enough problems so as not to be satisfied. That's the neutral stance. So when approaching it from this angle, it is almost a roughly even split between those that are actually happy or satisfied with integration and those that are not. And for the 50% that are not satisfied, there were probably specific factors that they could point to, such as you all did with the first polling question, that are the cause for their dissatisfaction, whether it be the speed or the format in which files are received, message reformatting anomalies and compatibility errors, a lack of automation, a lack of straight-through processing, overly manual processes, etc. And while these problems could be occurring due to inefficiencies in either the corporate system or the bank system, or even a combination of those two, the bottom line is that bank connectivity does remain an area where clearly further improvement is needed, and where corporates routinely indicate a lot of headache, more so than in other areas of bank service. And this is important to realize and understand as we head into discussing the specific components of connectivity, because it is this dissatisfaction that has been a large driver behind the continued bank and fintech R&D and innovation in the space, and it has pushed banks and corporates alike to strive to get more automation and efficiency out of their connectivity architecture. Craig, any thoughts?
Yeah, connectivity and information reporting, payments are massive drivers of income and profitability at banks. This is a very, very significant area. So it is not a small issue. It's a major issue that only half are satisfied or very satisfied with this. This is definitely a call to action for many banks to make it easier to connect to them and be able to integrate the back-end systems, especially with things like fraud management being important and efficiency. Those are the two top items that drive it. And if you're not satisfied with the integration, you can't be efficient, and that's going to drive this. And since it's such a significant area of revenue and profitability, banks need to move on that, and corporate treasuries need to continue pushing on it to move things forward. So excellent, Isaac. So this brings us to our second polling question, which is a mirror of what we have up here. So we're going to move that polling question to the screen. And it's asking you, how satisfied are you, and this is the people on the call, of course, with the integration between your financial systems and your banks? So where are you on that? Very satisfied, dissatisfied, neutral, satisfied, or very satisfied? So it'll be interesting to see how this falls out and if it mirrors the broader survey. So while people are answering that, Isaac, I know we push a number of very, very large surveys, and we do want to thank everyone who takes the surveys that we put out. You invest time, you learn about different practices, even the questions help you think through your organization, but it also helps the industry at large. So we really appreciate you taking the 20 minutes or 30 minutes to respond to the surveys we send out. So thank you very much. We're going to, we're over 100, or it'd be nice to get a couple hundred items up here. So we will we'll show the results now. So Isaac, this group is less satisfied than the other polling questions. So we're at about 39% are satisfied or very satisfied. Bigger neutral audience, 26% are dissatisfied or very dissatisfied. So maybe that's a clue for people tuning in on bank connectivity. We got a little more of the neutral to very dissatisfied items on there. All right, so we'll move the poll off, polling question off. Thank you for responding to that.
Yeah, thank you. We appreciate your participation in that. And moving forward now, going to slide 9, we are beginning to look at specific types of connectivity now. So we're still not looking at specific messaging formats, but rather which channel or channels corporates are using to communicate and transact with their banks. And there are a wide variety of channels to choose from. With regards to the most popular methods, as you can see on the screen, both file transmission from an accounting system, ERP, and the use of bank portals saw nearly 60% use, so almost 2/3 use throughout our corporate respondent pool, with direct connections being used by about 1/3 and Swift connectivity being by about 1/5. So none of these figures should be, or at least to us, were that surprising. Bank portals and ERP payment files have both been common forms of connectivity for some time. And as it stands, there are a vast number of corporates that leverage ERP systems, and as such, direct file transmission from the ERP to the bank is a common practice. And although bank portals are somewhat manual process as it involves keying in information to an online or a web-based platform, such portals still see regular use by Treasury. But now looking elsewhere, direct H2H connections were in use by about 1/3 of firms. So these types of connections are typically reserved for larger companies that send very high volumes of payments through a single bank, or for companies that just want more control over their payments activity, whether it be for security purposes or for other reasons. This connectivity option is typically a little bit more expensive and costly to implement, but it can be a very effective option if payment volumes are high enough, because it does streamline integration with the bank system and introduces more security and control throughout the process. And continuing down the chart to Swift, we see 20%, or 1 in 5 firms, nearly using this method. Since Swift's primary business case is for facilitating cross-border transactions, it is generally those firms with fairly intensive cross-border operations that need to rely on the system. And as such, I do see the 20% number being slightly on the lower end of what I'd expect, especially when considering the global operations of many firms today, but still within line of the level of complexity that we do see. And finally, the use of third-party payment services and solutions was between 5 and 8%, and that includes just a number of niche connectivity products and channels, but we did not pry too much deeper into what those options were, so I'm not going to elaborate too much there. Craig?
Yeah, thanks, Isaac. So moving to, continuing the discussion about where we are currently, but moving to bank format offerings and support. We do, on those surveys, query banks across the globe. There is better representation in North America, Canada, U.S. in particular, than any other region, but it's just interesting to see what are the formats that people use for information reporting. You have the 2 old formats, BAI2 for prior day, and MT940, an old format, message type 940, or current day 942, right around 80% of those. When you look at the newer format, like the camped formats, which is ISO 20022 using the form of XML, a little over half have that as an offering. Now, just to explain that quickly, when I say older style formats, I don't mean that to be mean. I mean that those were created when passing data cost a tremendous amount. It costs so much money to send data. They made it very efficient, or they minimized the cost by, everything was just separated by a comma, and the if it was the 7th position, that meant transaction number. The 8th position might have meant transaction date, and amount was in the next position. So it's separated by comma. So it's really condensed and dense. And so your systems can read that, and it knows and follows along to say this is a value date because it's in this particular position. The newer and better formats like the ISO 20022 rendering and used in XML, the extensible markup language, doesn't care so much about how little data gets transferred, because transferring costs almost nothing today. You can pass, I don't know, your kids probably watch, maybe you watch and binge watch Netflix videos 4 hours a night. Well, the amount of streaming data that would bankrupt a city in the past. Now, data transmission is extremely affordable, and so the information can come over in a more enriched way. In other words, the transaction date has a date, but it's also wrapped with these tags. So it says it, and you can visually see its transaction date, and you can see that it's extra information. Every bit of information or data now has the descriptor fields with it, and that's great because it's, one, easier to manage and see when you're reading it. It's also easier and more flexible if someone adds additional data. One bank provides more enriched information. They provide 3 other fields. Well, that won't break a system if it's using this new format, because it's just the system that's processing that, if it doesn't look for it, it just doesn't use it. But it won't break it. If you stick another data field in a BAI or an MT940 format, it's going to throw off the positioning, and it'll break the process, and you won't be able to use it. Whereas the new ones are more flexible. They can carry more data. So that's a pretty long discursus on that. So we'll move down to payment generation. You can look at the adoption of MT101, the corporate bank wire transfer payments, or high-value real-time gross settlement, or RTGS systems. Number 1 there. Notch in the U.S., just in this environment, making up about 3/4. EDI 820, we've heard about the death of EDI 820 for so long, and yet almost 70% are using that. I think what's good about that is that it's a great format, and once it works, systems keep running, they keep going. So when we talk about new payment formats, new activities, these old ones tend not to die, or they take some decades to die, because a system's working, it works fine. You don't need to throw it away, but you do want to, and oftentimes do, add the new format. So with that, I don't know, Isaac, if you had any comments on that before I advance the slide.
Just real quick, I will say this was a 2016 survey, and we have seen a little bit more corporate adoption of the ISO 20022 formats in the past 1 or 2 years. So I think it is a little bit higher than the 35% and the 54% that you see there for payments and information reporting, respectively. That's about it, though.
Perfect. It's growing. Thanks, Isaac. So the next item is the corporate adoption XML, extensible markup language. Where are people using that? What are their plans? So when you look at the newer formats, this is from 2016, as Isaac said, so it's grown since then. 31 were using it at that point in time, 31% for payments and information reporting, almost the same. And about another third, almost a third, a quarter, we're planning on using it for payments, and almost a third were using it for information reporting, within 3 years. So that would get us up over to 60%. So our next survey that has that'll be interesting to see where it is. Very few had plans that were out past 3 years. Most people don't plan that far. And then about 1 in 5, 18% there, or 1/9, whatever, weren't using and had no plans to use at all. So it's just interesting to see there becomes a point where the newer formats, when they're enriched, they might be better and more stable, but if you don't have many changes, you may not have the impetus to say we're going to make a move until certain activities occur. So maybe at some point organizations say, we're adding new ones, we're going to add all new ones with the newer formats, the newer methods. And then at some point, we're going to slowly replace the older ones. Anytime we have to make a change, let's say to our payments, we're going to move to newer formats. Or information reporting. When our banks offer it, and we have to make any kind of change, we need new information, that's when we'll change to the newer formats. But we're going to keep the other ones up and running. So it is interesting to see that people are starting to adopt it, and that's part of their strategy and their plan to adopt and make changes. So I'll turn it back over to Isaac.
Sure, thanks, Craig. So here we're looking at some of the various faster payments options in use around the world, but with a focus on North American services like same-day ACH and real-time payments. We've also included some data here on the current use of blockchain as a payments rail and on the adoption of Swift GPI, which has only been out for a year or two now. And again, since a large portion of our survey population is headquartered in North America, we do see a significantly larger percentage of corporates that utilize same-day ACH and RTP, real-time payments, compared to EBA in Europe or the new payments platform, NPP, in Australia. While there are arguments and cases to be made for each of these services and solutions, I think the main takeaway from this chart and from this slide overall is that it takes time for corporate adoption of new services and solutions to occur. This conservatism that corporates display when it comes to adopting new technology specifically is something that we routinely discuss, and we have years of industry data that highlights the corporate mindset here. And the simple truth is that the majority of corporate treasurers would prefer to wait until a technology or service has proven its effectiveness and its long-term viability in the market before they adopt it for themselves. And a good example of this conservatism in practice would be with regards to corporate adoption of cloud-based or SaaS technology. Specifically looking at TMS solutions. I mean, these TMS solutions, cloud-based ones, have been around for nearly 2 decades, early 2000s, and have proven to be incredibly cost-effective options. But only within the past several years have we crossed the tipping point of where more existing platforms are SaaS-based than installed. And although we really did see the adoption of such solutions pick up in the early 2000s, it wasn't until several years ago that those solutions actually outnumbered installed systems. So now when we look at something like blockchain, and we'll discuss blockchain further in a few slides, but looking specifically here at corporate adoption of blockchain for payments, the fact that just a few % of firms are utilizing it does not mean that it's a bust. While one could expect maybe a larger swath of the corporate environment to already be involved with blockchain, keep in mind that most treasurers, as you well know, have massive workloads and are incredibly busy, and until a new technology or service can demonstrate clear advantages to their current processes, it doesn't really make sense for them, time-wise, to proactively keep track of every little update and every new development. And again, this does not mean that the interest and traction of blockchain or relevant services is non-existent. It just means that those technologies have farther to come before enjoying a more mainstream corporate audience. But then looking at something like same-day ACH, on the other hand, we see that adoption has been more broad, and corporates are actively looking to utilize the service. So here, this is most likely because corporates have more familiarity with the ACH network, and it is relatively easy and less risky for them to increase their use of the service and reap the benefits compared to something like blockchain, where there's still a lot of confusion regarding how it works, its safety, etc. So while adoption of some of these services has been limited up to this point, we do expect to see continued growth moving forward. Craig?
Yeah, we're going to do another poll question at this point, so we'll slide that over. Excellent. So this question asks about your organization's status on adopting or using ISO 20022 financial messaging. That's either the cash management CAMPed or paying for payments. So where are you? 1, we've already adopted the standards. 2, we're in the process of adopting them. 3, we have plans to adopt the standards, but it's in the future. And we do not have and do not plan to use the standards. And the last one is, I don't know. Sometimes we leave that off, and that's a good one to have on there. It just might not be communicated. So, yeah, if you'd go ahead and answer that, that would be excellent. And while those of you who have answered, I would point you to the notes section where we have a LinkedIn group called Treasury and Risk Technology, and we have the link up there. We'll drop it into the chat box, and go ahead, and if you're not a member of that group, click it and request to join. We'll get those approved today, and we can continue the dialogue and share information through that means as well. We'd be happy to see you on LinkedIn. So again, thanks for clicking on that. Now let's go ahead and we'll let you see the results. So We've already adopted the standards, or we're in the process, 18% or so. So about 2 out of 9. We have plans, another 2 out of 9, so about 4/9 there. And then we do not have and do not plan to use the standards, about a quarter, and a little over a third don't know. And it might be because it's not come up. I don't know all the reasons why people may or may not know. It just may not be hot on the list, or maybe you're in. Maybe some people are in accounts payable. But I think it's interesting to see how that tracks with the other items that 4 out of 9 have plans or are already have adopted ISO 20022 for financial messaging. This is, I think, showing a very good pickup of new message formats. We like to think if something comes out, it's great that it'll be adopted in a year, when in reality it takes a number of years, a certain amount of time, for people to change their systems and move in this direction. So I do see this both in this polling question and in our surveys, that companies and Treasury people are leveraging the new technology. So we'll move that off to the side. Thank you for responding to that polling question. And we will jump forward to bank connectivity. So what are some of the innovations? Because if we talked about XML and ISO 20022 as being already established and are in the growing phase, what's a little bit newer? So there's a couple things here that I'll talk about. So blockchain, we have another slide where we talk about that a little more in depth. This is the idea that instead of having a central authority that confirms the payment, i.e., let's say a bank, if I need to pay you as a corporation to corporation, I move the money to the bank and they take care of settling it, or they take care of confirming trading documents have done or activity has occurred. Blockchain has a bunch of independent locations that can validate the activity as you continue to add to a digital chain with additional bits of information there. So some of the blockchain takes a tremendous amount of computing power to run and confirm, and others are much more rapid. But a number of banks have spent a significant amount of money investing in the development of blockchain, particularly for trade documentation and other activities. If we look at Swift GPI on the bottom left, you think about the challenges you have with payments. I send an international payment. I sent it. The other person hasn't received it. Where is it? We got to send a research. I have to have it researched. That takes time and money. And then finally, 2 days or 5 days later, it pops up and into the account. So that's one element. Also, not knowing where, what information is included or what's that for posting can be a challenge. And maybe visibility to what some of those costs are. So Swift GPI takes most of those issues and resolves those by allowing you to see where the item is in the process at all times. It gives you clear visibility and additional information. So it removes and focuses on the pain of payments. Payments is not just moving an item, it's knowing where things are. So Swift GPI is very, very interesting in terms of a global standard. There's also some regional solutions for better and faster payments. We don't just want payments to be faster, we want them to be better. And Swift GPI is a good example of a better payment, providing better information. APIs, or application programming interfaces, these are, let's just call it coding, that allows you to integrate, let's say a technology vendor can request and consume, or request and pull and display information about what's your bank balance or transaction without setting up a secure file transfer protocol, filling out all the documents, etc. It provides an easier way for technology partners to get at certain parts of data, who's a signer on the account, etc. Still secure, but it means exposing that data in a secure way, in a way that's different than banks used to do it in the past. And this has been driven largely by regulation. So from the Second Payment Services Directive in the Eurozone land required banks to provide support for that. very interesting to see what's being done and what's possible with that, hopefully supporting increased levels of innovation to pull, use data. So this will be another method of getting and tracking data, but it also adds more complexity because it's one more way you can get data. So mobile banking apps, payment generation, alerts and notification. This is very interesting because on the consumer side, tremendous progress and significant level of comfort there among people. When you get to the corporate side, making sure that there's dual authentication, multiple points of control. The uptick and the focus on that is less for originating and approving payments, but certainly for seeing and being kept aware, there's a tremendous adoption. But as people get more comfortable on the consumer side, we are seeing, maybe not caused by that, but we are seeing an increase in comfort on the corporate side for using mobile banking apps, mobile apps with treasury systems, payment systems to go through that method. Now I'm going to keep moving along for purposes of time. So when we talk about, continue, where are we going? What's more important, speed or better information, right? People don't necessarily just want faster. Faster's good, but people want better payments. So what were the key issues or what was most important? So more information for posting, 52% of firms had identified that as the more important for inbound payments. Faster settlement was 36%, so pretty much about a nearly 50% lead is handled by more information for posting. So I can take that and I can post. That's really driven, I think, by the efficiency question. So those are a couple items that are important. A couple items, too, when you look at, I'm not going to read the right-hand side. I hope that's not disappointing. You will get these slides. But when you look at what were some of the challenges, with some of the old MT standards, the old MT standards were written in an age where messages had to be very small. This is, now we can use much better formats that can contain more information, and you can do more with them and get better results. So that's why Swift has really been pushing the adoption of the ISO 20022 messaging framework and using the XML standards for that, or XML formats for that. So it's excellent. And speed was such an issue. When you get used to, you can send money to a buddy or a person across the globe in a matter of seconds or a matter of minutes, and then you say it's going to take 5 days for you to do that. On the corporate side, people say that doesn't seem like it makes sense. We've got to get faster in addition to getting better. And so examples of Swift GPI help move that along by addressing some of the core needs and core concerns on the corporate side of things. Now I'm going to keep advancing now. Where are we going? Some of the concepts here that we talked about, one of them was APIs. And I just wanted to share a visual that Isaac had mocked up, and we had talked about how do you show how an API works. And, well, it's not perfect. There's no great way to do it, but at least conceptually you'll get some of the concepts there. So the PSD2, or the Payment Services Directive 2, as a standard for Europe to say, hey, banks, if you look at the top part of the screen, you say banks need to open up their underlying systems so that if someone wants to know what is my balance, or who's the signer in the account, or other information, that information has to be open to a much more streamlined way of getting to it, sort of democracy for bank data. Well, those underlying systems are pretty significant. They have a control framework, et cetera, that is very involved. So the banking systems have to expose some of that data to an API framework that the data's there and can be called on quickly. So a fintech system or a corporate system can leverage an API or an application programming interface, let's say a set of codes that can go and query for that information and retrieve it. Now it does it in a secure manner, and information, let's say summary or maybe a transaction, a detailed transaction, comes back into whatever the UI is, whatever the user interface is. So it's just a quick way of being able to ping and get that information back rather than having an entire FTP process kick off, establish a connection, transfer a file, then load that file in. It's just pulling, whatever the data is that's necessary. It's considered, part of the open banking and open architecture, allowing more development to take place. Now, the FinTech APIs, FinTechs can create methods of pulling this data without all of the overhead of host to host and some of the other connectivity methods. Now, with that, I'm going to turn it back over to Isaac.
Yeah, thanks, Craig. So going quickly in the interest of time, but we recently decided to pull both corporates and banks on their perspectives towards APIs and blockchain, and actually decided to pit the two technologies against one another to see where practitioners saw the greatest current benefit for their outbound payment operations in this case. And looking at the data, clearly APIs were the winner for both banks and corporates. In fact, they were labeled as more important by 4 times as many corporates and 6 times as many banks. So although we really didn't pry further as to determine the cause for that clear preference for APIs, there are obviously some assumptions that we can make, and Craig just touched on some of them, but perhaps the most notable development involves the introduction of the Payment Services Directive, the revised Payment Services Directive PSD2, and the creation of an open banking environment. Obviously, APIs are playing a big part in streamlining integration between bank systems and those of corporates and other fintechs. And APIs are already becoming a component of many of these financial solutions, and given the impact of PSD2 that it's having in Europe and it's starting to penetrate other regions of the world, the case for APIs is strong. So moving forward, they do look to play an ever-increasing role in facilitating STP between systems and helping to reduce manual workflows for information reporting and processing and that nature. But at the same time, I think it is just as interesting, looking at the right side here, that just over half of corporates and about a quarter of banks were unsure of which of these two technologies were most important for them. Again, corporate familiarity with new technologies is limited, so twice as many corporates were unsure compared to banks. But literally more than half of the entire corporate audience was unsure here. So this really points to a lack of understanding of emerging technologies and new services. And going back to the subject of corporate conservatism and the intensity of their current operations, it just seems like a lot of treasurers have not really had the time yet to pick their heads up and analyze the impact of either of these technologies, APIs or blockchain. So this is definitely something that we will be monitoring in the coming years to see how corporates do react as APIs and blockchain increasingly penetrate the financial environment. And Craig, you can go ahead and add anything there.
Yeah. So blockchain for Treasury, how current are people in terms of staying in touch with the developments there? And you can see from the top to we're actively monitoring, we're piloting, or we're more passive, or we don't keep up with it at all. You can see, a small percentage are very active in seeing what goes on. Some are just, hearing what goes on in webinars or through different payment media, treasury media, et cetera. Bankers, if you split the data out, bankers are paying a lot more attention to it, obviously because they have a lot of customers. Some customers are more interested than others, so they tend to have a requirement to stay current. I'm not going to go through the whole steps on how blockchain really works. I'll just do one description, but as information goes on, a transaction occurs, and how do we go ahead and track it? And that bottom screen on the bottom right-hand side, everyone's tracking it, that the last activity, there's another data block added to form a chain of blocks, so each one shows the custody, the ownership, the non-repudiation aspect of it. But blockchain is a good session for an entire webinar, and so I'll just leave it at that.
All right, thanks, Craig. Moving forward here, switching subjects to mobile banking. So I know Craig gave you some information up front, but just some more quick backgrounds here. We also asked banks how important they considered commercial mobile banking apps would be for their corporate clients over the next 2-3 years. And the vast majority, over 3/4, found such apps as being important or extremely important. And not as many banks saw them as being unimportant. In fact, not a single bank labeled such apps as unimportant. That wasn't a 2018 survey, and given these percentages, it is clear that banks are anticipating pretty high levels of development and growth in this commercial mobile banking sector. However, when we asked corporates how important such applications are or will be for their operations, the response was a little bit different. So for corporates, only 24% saw such developments as important, so less than 1/3 of the optimism compared to banks. And this was a bit surprising at first, but in analyzing results from other surveys, there is one primary factor that looks to be one of the causes, or potentially one of the main causes of this divergence in perspectives, and that is that when it comes to mobile devices, corporates have consistently shown that security is a major concern, especially in today's fraud ravaged environment, and many of them are reluctant to potentially introduce additional fraud exposures to their payment and banking operations through the use of mobile apps. That being the case, you can see here that more corporates are currently uncomfortable with the use of mobile banking apps than are comfortable, and only 1/4 of the corporate audience were actually okay with their use. The good news here is that many treasurers have indicated their level of comfort, their comfortability with mobile payments has increased over the past year. In fact, I think it's 4 times more indicated that their comfortability has increased versus those that has decreased. So over the next several years, provided corporate skepticism does continue to wane, we should see continued adoption and development of these services. And then really quickly looking at the left with regards to some specific types of mobile banking functionality, the chart shows some of the more popular options that corporates do foresee using when it comes to mobile payments. At the top end, you see things like receiving payment alerts, expense approval, and some other functionalities like the ability to stop payments and receive exception notifications coming in just under that. So when corporates do finally get around to accepting and leveraging mobile apps, there is a broad array of functionalities they could use, which should serve to increase the flexibility and ease with which treasurers can manage payment activity, again, provided that corporate security concerns are able to be put to rest.
Excellent, Isaac. And as we move to the summary screen, we're going to pull up the last polling question. Maybe we can stick it over the light bulb there. So I'll summarize those items as we ask. So what's your level of comfort regarding the use of mobile apps for B2B payment activity? If you go ahead and answer those, and then while you're doing that, I'll talk through some of the key takeaways. I think we proved in the beginning that complexities abound across that whole list of categories. There are all those dimensions of number of systems, number of banks, number of currencies, et cetera, et cetera. Complexities abound. You have to deal with that. So part of your technology needs to be designed to address both the existing requirements as well as those things that are emerging so that your organization can flexibly manage and scale with the environment. Second, technology has changed dramatically. You look at new payments, new treasury systems, new banking platforms. There's a lot that has changed. And your banks may or may not have changed and kept up with some of the new methods of handling connectivity and integration. This is something you want to pay attention to. It's reading, conversing with your peers, attending webinars. We have a number of analyst reports that you can look at. The last point here is everyone's focused on efficiency and control and security. So technology can help address those, and you can't look at it to just optimize efficiency or just optimize security. Both have to be met at a significant level. And the efficiency means you address this range of systems you have in the background, the environment of lots of changing payment types and developing payment types. So this is the whole matrix of what you need to do and plan. So when you make changes, everything moves you in the direction you want to be. Your future state, you might not be able to do all of it at once, but you want to make sure every time you're touching a payment file format, you're adding a new bank for information reporting, et cetera, you're using your future state environment, your future state format, and those activities. Now, we're going to go ahead and show the results of this. Very comfortable with mobile apps, almost 40% comfortable and very comfortable. So a very mobile-friendly audience. Neutral is 33% almost, and we've got a little over a quarter are uncomfortable or very uncomfortable. So very interesting. Thank you for answering the polling questions. We're going to move that off to the side. and then Isaac has a few key elements before we get to the closing announcement. So Isaac?
Yeah, thanks, Craig. And just real quick for anyone interested, we have just developed, we at Strategic Treasure, a new resource or set of resources which we have called Treasury Insight, which is basically a giant library of Treasury and finance-related data that we have built over the course of the past 9 years. And starting this fall, we will be offering customized benchmark or market intelligence reports to financial institutions, fintechs, corporates, anyone wishing to learn more about the Treasury operations of their peers, their target audience, or their clientele. So these reports are pretty much customizable to fit the unique requirements or interests of any institution. And for anyone that would like to learn more about these reports, you can click on the link below on your screen, and you will be redirected to a page on our site where you can download a brochure and get more information on the scope and process there. So thanks again for joining us, and I'll turn it over to Laura Beth.
Yes, thank you, Isaac, and thank you, Craig, for joining us today. This is a very informative session. I know I learned a lot. I hope everyone else did as well. Just a reminder, the CTP and FP&A credits, the webinar deck, and the recording will be sent to you via email within the next 7 business days. And I would like to invite you guys to review this webinar by clicking the Click here to provide feedback on this webinar button on your screen. We love making our webinars better each and every time for you, and we can't do that without your help. So again, just drop us a review, and we look forward to seeing you on future webinars. Thank you so much, everyone.